Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about MRF, one of the marquee stocks in the tire industry. Let's understand when to invest into it or whether to invest into it or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with analysis of MRF, here's a small request that kindly support me on Patreon, and once you do that, I'll help you in market queries as well as company queries, one line answers only. And if you take a $10 per month, you can say package there, you'll have access to my portfolio, a watch list that I'm preparing, as well as exclusive videos on and stock calls for long terms. And apart from that, you can ask me one query a day on that with $10 for detailed market or company analysis. And you want to talk with me, you can always email me and we can connect in different ways, one-on-one. So you get access to exclusive articles and videos before I get it on YouTube as well. Now about MRF, the company was established in 1946 and its complete name is Madras Rubber Factory. It is the largest tire manufacturer here in India and manufactures for passenger cars as well as commercial vehicles and two-wheelers. And everybody knows about the brand, especially because of the kind of stock price per se the company is with no splits, no bonuses whatsoever, and the stock is trading at around 55,000 rupees, and it has come down from 70 odd thousand rupees a share. So that is a kind of a unique thing about the company. The market cap of the company is 24,000 crore, although the stock price is around 57,000 rupees. It has export operations to multiple locations, and that is also a fillip that MRF had over the last few years that has gotten the stock going from levels of around 6,000 in 2011 all the way to around 60,000 at the moment. If we look at the financials of the company, and this is December 19 number, so sales have gone down by around 4%, and profit is down by around 17%. The promoter holding is low, but the debt is low as well. uh, uh, I would say the company is in relatively higher debt rather than low debt, and that has also meant that the company is under pressure. So I'm sorry to write both low and high debt here. The company is having relatively higher debt than low debt, because if you look at other companies, some of the tire manufacturing companies are debt free. Return on equity is around 9.5%, and operating profit margin is around 14%, which is quite good considering the industry average that is right now in the single digits at the moment. If you look at the stock performance, and the stock is up 2.5 times in the last 2 years. Till 2018 July, it did really well, but have fallen around 30% from the 2018 July. So nearly in 2 years, in the last 2 years, yeah, it has fallen something like 30%, has remained in a range post 2018 peak, and the return ratios have been average after 2018, and that has led to lower demand of the price. But again, the stock has not nosedived, so it has not gone from 74,000 all the way to 40,000, or has halved because of the market going down by 34%. What has happened is that the stock has remained range bound, and people who are holding on to the stock at 30,000, 32,000 levels are still holding on to it. People who have bought it high are still holding on to it, considering that the kind of company it is, and the revival can come anytime in the auto industry, so they are not selling. So not much of selling goes around in the stock, and there is very low float of the stock in the market, so one has to realize this. And so people who get into stocks like MRF or Page Industries or Eicher Motors at higher levels, even they stay with the company, because they understand that with low float, any good news, one good result, and the stock could easily go up 20-30% in a matter of days. Return ratios have been average over the years, over the last 6 8 quarters, it hasn't been that great. The numbers have not been that great, and that's why the stock is range bound. The notional price being high is also a deterrent for new players to get into the stock. So any retail investor will think 10 times to get into a stock which is priced at 57,000 rupees, than a stock which is priced at something like 570 rupees or so. So that is also a concern. So uh, that for that, probably the company can go for a split, a bonus, or some kind of that arrangement, but they have not done that, and a lot of rumors have cropped up in terms of the same situation, that could happen, but that has not happened. So over the last 5 6 years, I've heard many times that the company is going for a bonus, for a split, or for other arrangements in order to take the notional price down from 57,000 to say 5,700 or so, in the range of retail investors, but they have not done that, and that is a kind of a USP for this company. So if we analyze the stock, lower crude prices is a huge positive for the company, and currently the crude price is around $30 per barrel, which is extremely low, and that is one of the most important raw material for the tire manufacturing company. Then you look at the global economic turmoil is hurting the company. So we are seeing currently from February onwards, the economic turmoil has gone even worse. It was not great before February, and it has gone even worse right now, and that has really hurt the numbers of the company. Currently trading at 24 times, it is richly valued compared to its peers. So there are companies like Seat, etc., and many other companies in the tire manufacturing business, so which are trading at 9 to 12 times earnings. This is trading at 20 24 times earning, but you need to understand the reasons that I've just mentioned, being the notional price, people not selling it, and many other things. And it is the market leader, so you have to have an understanding that this is the market leader in this domain by far. MRF is up there. This may continue to feel the heat due to the current macro environment, as I'm seeing. So not in the next 6 to 8 months, I don't see the stock really scaling new highs and something of that sort. So it can remain range bound. Low dividend payout is also not helping the company. So although it has not gone for a split or bonus, it has not given very handsome dividend. I think the dividend is around 100 rupees for a stock that is trading at 57,000 rupees. 100 rupees is, in my opinion, nothing. Will do well when uncertainty subsides and we see complete lift of curfew. Yes, it would do well at that point of time when this pandemic ends, more or less, or goes away in 80 to 90%, and the company starts selling big time on tires and etc. Otherwise it won't. I don't think the stock will do that well, because they need to have the sales. So it is like an auto ancillary company, and an auto ancillary company will always do well when autos do well, and currently we are seeing the even a worst, you can say, a turnaround in the autos, and autos are not doing well. So probably for the next 6 8 months we could see the stock price range bound or going lower. So currently auto slowdown worldwide is also a big deterrent for the company's performance. If we look at the technicals of the company, then currently trading at 24 times, 50,000 is a huge support, a very good support between 48,000, 50,000. Currently trading at 56, 57,000 or so. Bigger up move expected only above 62,500, and it is a good proxy to autos, but then time frame should be 5 6 years. So I don't see big up moves. So there could be gyrations, there could be up moves and down moves in the next year and a half, but over a 5 6 year period this could do well. Whenever autos come back, MRF will do well along with autos. The 200 DMA is around 62,300. Keep that in mind while trading. So when it goes above it or closes above it, that would be good, and make collapse below 50,000. So as I mentioned, it may collapse below 50,000. So keep that in mind. If you're holding on to the stock below, say 40,000, closer to 32, 33,000, which was a previous low during, I think, demonetization or in 2018, early part of 2018, late of 2017. So if you are holding the stock from those 30 odd thousand levels, it would be a good time to probably add a few shares, one share here and there over the next 3 4 months, and then just sit on it for the next 5 6 years, you'll get even bigger returns. So what needs to be done? Buy at current levels only if you have a good 6 year time frame. Otherwise, we could see even more fall, and we don't know if the markets go to something like 6,000 level, 6,500 level. Then we could see a situation where the stock may fall all the way down to 40,000, 42,000 very easily. So have a clear understanding as to what is your time frame of holding on to the stock. The recovery in the this industry, in this sector, will take at least a year and a half more. So I believe by the end of 21 or closer to the start of 2022, we could see a big move in autos and auto ancillary. So you have that time frame with you to accumulate the stock. So add more on major declines. Drop in crude prices is a huge positive, and that would come through once the economy opens up, once people start buying cars, once people go out with cars. So remember that if cars are not being used, or cars and trucks are not being used, that there will be no wear and tear for the tires, and then there will be no chances of the tires getting replaced. So the two best way of tire manufacturing companies to make money is by replacement of tires or by new production of cars, and both are being stalled. So that is one major concern for the industry, and we could see corrections in the stock. It should give handsome returns in the next 5 6 years, as it has given for the last 10 years. It has been 10 bagger. I think it was 6,000 in 2011 or something. 8 9 bagger has already happened in MRF, but is still a 24,000 crore company. Remember, this is a market leader, so yes, stick with it. If you want to be in this sector, then stick with MRF on major declines, but have only 5 to 10% exposure into such stocks. So this was a video on MRF. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.